Hey guys, what's up? It's Alec back with the daily stock market. And if you are looking for two stocks compared to against each other in the plant-based food space, you came to the right place. Today we're talking about Tattooed Chef versus Beyond Meat in a deep dive showdown to see who is the better company to own for the long term and who can make money in the short term, swing trades, money to be made, and everything under the sun. I also have a lot of other videos that I want to compare against each other. This one's obviously going to be Tattooed Chef and Beyond Meat, but I also want to do like Etsy versus Shopify. I want to do Amazon versus Walmart. I wanted to also do Costco versus Target, or maybe Target versus Walmart. And I also want to do things like Pinterest versus Etsy, AT&T versus Verizon, SoFi versus Upstart, Fiverr versus Upwork. I also want to compare airlines against each other, 5G stocks, maybe even like an Apple, Amazon, Facebook, Netflix against each other, FANG stocks, auto stocks, banking stocks. So comment below on which specific stocks you want me to compare against each other, or what industry of stocks you want me to compare with each other. So first off, starting off this video, we have Beyond Meat. And in my opinion, why I pulled up Beyond Meat is because I think Beyond Meat is a pretty good price to start buying some shares if you're not already have a position. And Tattooed Chef is making some interesting movements in the stock market recently also. So with that being said, Beyond Meat's down 26% in the last 3 months, which is a huge downward movement, 26%. And if you look at it, if you're a long-term subscriber, you know I've been trading Beyond Meat very consistently for the last year because it follows this pattern very frequently and very easy. Right at about $115 per share. Sometimes it goes as low as even $105 per share. It always hits that support. And then right at $145 to sometimes $165 per share, you'll see it consistently spike back up there when it does go below $115 per share. Okay, so that's the first little tip. Now, $135 per share, it hits very consistently, so that would be very easy, in my opinion, to see that swing trade. And then you can even see it go as high as $175 and $185 per share. So we've seen some huge swings on Beyond Meat. It's a good one to start swing trading. Down 8%, only have 5 shares. It's only 0.8% of my portfolio diversity, so nothing to worry about. Now we get down to the stats, okay? So it has a $7 billion market cap, which we're going to be comparing to Tattooed Chef. And it also has an average volume of around 2 million. 52-week low, 52-week high is more than 2x. And you'll also see in recent news, the COO steps down, which is good for short term because it pushes the stock lower. It's nothing to really worry about for the long term. It's not like the CEO or anything like that. The COO is not nearly as important. That's just the chief operating officer, which is really easy to replace. Now, if we go over something like a Tattooed Chef and we look at the market cap, you can actually see my shares. I'm up 9%. Before we look at the market cap, which is only 1.7 billion, so it's significantly smaller than something like a Beyond Meat, and the volume is even higher. But let's look at how the stock has been treating us. So in the last week, it's down, and it even peaked at around $24 per share in the last week, and we've seen it as low as $16 per share in the last month, which was August 17th. So again, this is a pretty easy one to swing trade. You see the patterns happen consistently here. We see it going down to around $17 per share, maybe even as low as $15 per share if you're lucky. So if you can pick it up under $18 per share and closer to $15 per share, I think you can have a great swing trade on your hand. And it's been following a nice swing trade. And it's been going up and down very consistently like a roller coaster, which we like to see. And it's been going up and down very consistently like a roller coaster, which we like to see, so we can make some easy money on. Now, my position, I have 43 shares, which is not that large of a position. Average cost is 19. We're up 9. And I think that, Tattooed Chef can easily be traded at around $24 per share or higher. Now, we already went over the market cap, which is significantly smaller than something like a Beyond Meat. If you see the earnings, they've been pretty much on pace with their earnings, and their 52-week high and 52-week low is just about double. One quick thing to note, we're on Beyond Meat. They have been consistently reporting below earnings for the last four reportings. Okay, so we have Tattooed Chef pulled up right now. So again, TTCF is the one that we're looking at. We're looking at financial details. We go down to the income statement. And keep in mind, it's kind of hard to compare these ones, even though I like to compare ones that are a little bit different in stages. For example, it's almost like comparing a middle schooler to a high schooler. You know, Beyond Meat's a lot more developed. They're the high schooler. And Tattooed Chef is more like the middle schooler in this scenario, or even elementary school. They've only been public for 3 years, so we don't have that much data on them. But from 2018 to 2019 on net income, they've improved by 118%. And then 2020 was obviously their year with an improvement of 2,848%. So obviously you want to be following their net income and seeing that they are producing a positive net income. I think they are actually negative this year, which is a little bit of a red flag. Total revenue, you can see, is not much to compare with each other, but we can compare their income, which is only 68 million, to something like a Beyond Meat. So Beyond Meat's market cap is about 5 times the size of something like a Tattooed Chef. So we should see their net income 5 times as much as 68 million, or their revenue 5 times as much of Tattooed Chef, which is only 148 million. Okay, but if we go down to their balance sheet, it looks beautiful for Tattooed Chef. This is one of the best balance sheets in the game right now, with a 12% liabilities to asset ratios. This is for 2020, so we would like to see what it is for current days. You can actually see their year over year cash and cash equivalents for Q2 of 2021 is up 162%, and they have 140 million in cash and cash equivalents. So they're absolutely killing it. Their total assets are up too. Their total assets are 222 million now, and 266 it looks like they reported in 2020. But let's look at their liabilities to make sure those liabilities have not increased by too much. So their most recent reportings for total liabilities is up to 50 million, which is a little, obviously it is up from their 2020 reportings. So it's probably closer to 15 or 20%, which is still amazing. That's about 4 times as much assets to liabilities, which is fantastic balance sheet. So one of the best balance sheet, A+ on balance sheet. It's hard to rate their revenue and it's hard to rate their income because there's not much data to look at. Okay, so now we have Beyond Meat pulled up. Q2 revenue up 31%. Net income is down 92%. So let's look a little bit more in details. So we have Beyond Meat pulled up. Here we have their net income pulled up first. And you can see that they've been reporting negative earnings or negative net income. They haven't been showing a profit at all for the last 5 years. It's been getting a little bit better, but in 2020 it's gotten worse. Let's look at how it is for Q2 of 2021. So their revenue's up 31% year over year, which is good. We'll do a little bit deeper in a second. Their net income, negative 19 million. So it's still negative 19 million, which is a little bit better than negative 52 million. But however, you have to think that's just for one quarter. This is for the whole year. If we look at their revenue, however, they're a revenue monster. They've been growing consistently double digits, triple digits every single year. 2017, 2018, 2019, 2020. So that's why you invest in a company like Beyond Meat. You know, you'd be hard pressed to find another company that's growing revenue for the last 4 years, 5 years, double to triple digits for 3 out of 5 of those years too. And if we pull up their revenue, remember we wanted to see their revenue 5 times as much as Tattooed Chef. It's about 4 times as much, right? So that's pretty interesting to see. That's how you can compare a company against each other also. Now, their total revenue is up 31% year over year also in 2021 for Q2. Now, let's go down to their balance sheet, which is fantastic as well. Another A+ on their balance sheet. Look at that. Their assets to liabilities are 4.6 times as much, which is absolutely crazy. It's hard to find that in the stock market. That's very good. You shouldn't be concerned with a company going out of business at that point because they can pay off all their debts, all their liabilities, and have significant money left over for research and development, marketing, or whatever really they want to spend that money on. So if we click into the balance sheet, we can actually see in 2021 Q2, their cash and cash equivalents is up to 1 billion, up 351%. So this is a very, very healthy company on their balance sheet. Their total assets are also up to 1.4 billion, up 183%. So they're now total assets, it says here 468 million. Keep in mind now it's 1.4 billion on their total assets. So they've raised their total assets 300%, which is crazy to think about. It's 1.2 billion, which is still crazy. Let's look at their liabilities and see how much that's gone up. Their long-term debt has gone up a significant amount, 2,000%, which is not good. It's only 1.2 billion. Their cash and cash equivalents is 1 billion. It can easily cover all of their long-term debt. Now, one bad thing to actually look at, this is why it's good to dive a little bit deeper into the balance sheet, is because you can see now their total liabilities are actually up to 1.2 billion, right? So these bars, the gray bar and the light blue bar, should actually be neck and neck with each other or even, because they're 1.2 billion each. Their assets are 1.2 billion and their liabilities are now 1.2 billion, which made their balance sheet go from an A plus, in my opinion, down to like a D. They're like a D plus or something along those lines. So Tattooed Chef is automatically becoming the better, safer investment. But if they do something like Beyond Meat has done and absolutely killed their balance sheet and taken on 3,000% or 2,000% gain in long-term debt, that's a very big red flag, and a lot of long-term debt that they have taken on, and a lot of non-current liabilities they've taken on, a lot of total liabilities. If your total liabilities on a company is increasing 845%, that's definitely a red flag and something that you have to wonder why their liabilities are increasing this much and they're not a profitable company. Now, I could go over, these stocks all day. We can look at news articles and read news articles and see what everyone's saying. But, I don't want to draw the video on too long here. So let me know if you guys like these deeper dive videos where I go over the balance sheet, income statement. Let me know if you guys want me to dive into those news articles, because we kind of did skip that this time. We usually go from balance sheet and then news articles, and then we go into what the analysts are saying. But let's dive in what the analysts are saying. We have Beyond Meat, and on average, they have it at about $111 per share, okay, which is actually a 0.7% downside. Some analysts have it at $120 per share, but again, personally, I think you can swing trade it to $135 to $145 per share, and that should be fairly easy. But a lot of these analysts are disagreeing with that. So do with what you want with that information. Tattooed Chef lost 16% in the last trading season. The drop comes after the company missed on revenue. The revenue guidance for the full year remains unchanged. However, the EBITDA guidance has been revised downward due to the increase in marketing, infrastructure, staff, and equipment cost. The company's growth rate remains impressive, but the quarter-over-quarter decline in general sales and branded product is one to watch. What first strikes us is obviously the missed revenue on 3.3 million, over 5% lower than the original guidance of 54 million. We would have obviously preferred to see a revenue beat as growth investors, but that's not always the case. As we could have expected, the market reacted strongly on Friday about the news, with Tattooed Chef losing 16% on the last trading day. This leaves us with a year-to-date performance of negative 25%. Here we'll actually see down here, revenue was 50 million, which represented of a 45% year-over-year growth. And the year-over-year growth is certainly impressive, which is a 45% gain on revenue, but the revenue came lower than in the past quarter. The results of Tattooed Chef branded products were similar. Revenue was about 33 million, which is 3 million lower than Q1. But however, the year-over-year growth was fantastic. So whether you're doing a swing trade or a long-term hold, I think Beyond Meat is going to make you some money. And same with Tattooed Chef. If you're doing a swing trade or a long-term hold, The patterns are very easy to trade. They spike every couple months and then they dip back down. So if you follow what I said in the beginning of the video, that's what I'm personally doing, at least buying under $17 to $15 per share. Tattooed Chef selling closer to $23 or above $24 per share. And for Beyond Meat, I'm buying under $115 per share and selling above $135 per share. So I hope you guys did enjoy that video. Smash a thumbs up, share it with a friend. Let me know, comment below what you want to see next and what stocks you want me to compare against each other. Let's do another $5 giveaway if you made it this far in the video. All you got to do is comment below, screenshot your comment, send it to me on Instagram, and you're automatically in the $5 giveaway. We also gave away about $200 additional this week. So if you want to be a part of that giveaway, it's easy money. If you want to join my close friends list, I have officially opened it back up. So if you want to join, now's the time to make some money, buy the dip, and see some green. All right, guys, I'll see you in the next video. Remember, don't time the market, buy the market. Peace.